So what is the prosperity profit system? Well, the prosperity profit system is our proprietary rules-based trading methodology designed to help traders approach the market with greater structure and clarity. So this is developed from my 15 years of professional trading experience and 9 years of client education support of running my company. So it is also built on documented performance. We have Padical, a company that has a information security management system certification. This is something that they go through. All of these huge companies that runs this is able to fully verify everything that we say. So we are fully documented and backed. 85% historical win rate with 8+ years of documented trade history, over 8,000 trades verified. So what is the foundation behind the stock price movement, right? So you have to understand there's a lot of strategies out there in the market, but at the end of the day, our market foundation comes down to straight to the supply and demand, meaning where are the most sellers selling and where are the most buyers buying. So supply and demand, or resistance and support. So the market moves on supply and demand. We simply identify where buying and selling pressure may appear. So we're very good at identifying where are the most buyers buying and where are the most sellers are going to sell 5-10 steps ahead. We are one of the few companies out there that were able to detect this very quickly and be able to teach to our clients and be able to help them understand in a very simple manner of how do we find these areas before these stocks erupt so that you're able to understand these key levels before the move happens. The prosperity profit system identifies key supply and demand levels, meaning we were able to now understand the overall market of this, where the supply and demand levels are. But how do we get to that core execution strategy? Well, to understand that thoroughly, we use our back system. So we use what's called the Heikin Ashi candlesticks. It's a Japanese style advanced average bar candlesticks. I do not use bar graphs, I do not use line graphs, I do not use regular candlesticks. I use only the Heikin Ashi. And this candlestick is where you will be able to be taught on how to find those key levels of support and resistance, meaning where are the most buyers going to buy, where are the most sellers going to sell, how to think like an algorithm, understanding where the algorithms are going to buy. Because at the end of the day, big institutions and all these hedge funds are going to program to the point where, okay, we're going to go ahead and buy when a certain amount of volume crosses, or this is where the support becomes and the stock price continues up. We teach clients how to do that in conjunction with my built-tier EMA system, which is our proprietary framework for reading momentum. So in combination, when you have both of this, is what makes this core execution strategy, understanding where the most buyers are going to buy ahead of time, and we are already ahead 5 times ahead of where the stocks are going to be selling the most, and we exit out before the stock price falls. We aim for that 4 to 7% minimum return per trade, which is the minimum target we always get with a dynamic scaling out system, which is our second target, targeting about 20 to 40% on average. So here you can see an example that you can able to expect. For example, here XRTX, you'll be able to get hand-picked deliveries from our analysts, including myself, me being the main analyst. We'll be issuing these opportunities with entry, the first target, second target, support, which is our stop loss. And basically you can see here on roughly the first target, you'll be able to make about 5%, between 4 to 6%. Second target, in this case, it was 35.55%, like I said, between 20 to 40% on average. You'll be able to receive roughly about, on average, 3 to 5 or sometimes 10 a day. So you can expect to receive these opportunities 3 to 5 a day, depending on market conditions. It could be more. Our strict risk management rules is important to talk about here because unlike any others, we do care the most about our risk, because you have to understand, in order to survive the market, you have to protect your capital. Without capital and your capital diminishing, you're just not going to be able to get ahead and become prosperous. So risk to reward, we always target at least 1 to 1. Many subs target 1 to 2 or 1 to 3. Okay, so that means that we're never going to risk more than our reward. Okay. Second thing is that we have dynamic position management. We're able to have a strategy where you can start scaling out your position sizes. So we don't just teach you how to just get out the first target, but as you grow your account, we're able to execute using our strategy, our prosperity profit system, where we're able to start scaling out and ride our size, our positions as the momentum continues. So we're able to follow this system, our rules following the system, scaling in and scaling out. Number 3, risk is plan before entry. So we always follow plan to trade and trade to plan, and we already know exactly how much we're looking forward to making and how much we're looking to potentially lose for that reward. So again, we do not risk more than a reward. So that's pretty much what it is.